Hi, everybody. Randall with RESNN Investments. And I'm going to continue my videos on actual results of real estate private equity deals. If you saw in the first video, I explained what a real estate private equity deal is and how they work, kind of the structures behind them. And so I just want to show you another deal. In this case, again, these are actual results of an investment that I invested into. Obviously doesn't guarantee anything in terms of future results. But in this case, this was a good exit. We profited nicely from the deal. So let's dig into the actual numbers behind it. This was a self-storage deal in that this company was going to buy between 10 and 15 self-storage units. And they happen to be located in North Carolina. So the units were going to be in that area. And it was going to be approximately a 5-year deal with the following terms, which was they were going to pay an 8% cumulative pref for our investment dollars, paid quarterly, so 2% every quarter. And then at some point along the length of the deal, they're going to start returning our original investment money. And lastly, if there's profit at the end, they're going to split that 70-30 with us taking 70%. All right. So here are the numbers. And again, these are actual results that I enjoyed in this case. So started the investment in November of 2018, where I contributed $25,000 to the deal. And as you see, then they proceeded to, on a quarterly basis, pay out their distributions. And as I've mentioned in the previous videos, that it's very normal to see that deals take a while to kind of ramp up and get to that 8% cumulative pref. So you can expect in the first couple of years that your return, your distributions that you're getting back from them are going to be a little smaller. And then as time goes on, they'll catch up. They'll pay more to catch up, get you back up to that 8%. But that's a very normal situation. You have to remember that they're buying properties. They're having to invest a lot of money into those properties to fix them up. And so there's less cash sitting around for you to enjoy. So in this situation, you can see the first payment was roughly a quarter into the deal. They sent us a check for $257. And then 3 months later, they sent us another one for $493, making the IRR at that moment 6.2%. The IRR is kind of generally a rough estimate of what the return was on an annual basis. If the deal were to end right at that moment and I were to get my original investment back, I would have earned a 6.2% IRR on the investment. So this deal's just a little different than the previous ones we showed, which is they were very quick to give us some money back, give us some of our original investment. So we got this kind of in between the quarter on May 30th, we got a check for $4,500. And what you'll see is that that was a return of capital. So now instead of $25,000 invested in the deal, we have $20,500 invested in the deal. This did not count towards the pref. Obviously, it was money. They were just giving us back our original investment. And really nice and quick in this case, 6 months into the deal. That's pretty phenomenal. So then we continue down a number of months where they're paying us pref. And you can see that it's getting closer to that 8% return. And then they had another big jump in payment, another payment where they're returning more capital in this case. So now we're down to an $18,000 investment, or we've had returned to us $6,750 of our original investment. Again, the deal keeps kind of chugging along. You can see some months the distribution was less than other months. So again, it's not guaranteed, but you do have this consistent cash flow. And ultimately, they do have a commitment to get up to that 8%, which they finally did in October of 2021. Let me scroll down a little bit here. And what we'll see here is we have, again, pretty normal distributions along the way, got us up to 8% cumulative. And now we have this sale. So they finally sold all the properties, and we have this nice distribution in February of 2022. Important thing to note here is that obviously COVID was going on during this time, and you can see it really didn't phase. There was no delays, nothing really bad happened related to that. So these guys were on their game. We got this final big check of $37,000. And you can see it's broken down in two ways. They returned our original investment. So they've returned all of our money back to us. We've received the $25,000 original. And then everything else is just pure profit here, $18,000. And then, as I mentioned in the last video, it's very normal for them to hold back a little bit of money until they close the business. It's tax withholding, it's expenses, things like that. And so in this case, they did have one final payout in December of another $479. If I scroll down a little bit, you'll see that this deal was quite good. We had, a total return of $24,405, which ultimately was almost a 100% return, 97% return, which ended up being, after 3.5 years, a IRR of 28.7% per year. This is a good one. We did well on this one. Obviously, we had all of our capital returned and we have nothing left invested in the deal. So here's a scenario where, and again, these were self-storage units where this particular sponsor did well for us. And I hope that shows you kind of what a typical investment looks like in terms of quarterly payouts and whatnot. Feel free to reach out to me. There should be a contact us link below. I'm happy to send this Excel spreadsheet off to you. And of course, I would love to talk to you about your particular situation and whether adding real estate to your portfolio would make sense in your scenario. Take care. Talk to you soon. Bye-bye.